Hey traders, Raghee here, and in this free recap video, we're going to cover projections on some of the trades that we have open right now, and projections in terms of follow through. Probably the most popular type of exit, the kind of exit that most people think about, is the stop loss exit. How do I get out if things go wrong? But where a lot of trades are most commonly mismanaged is, well, how do you get out when things are going right? How do you actively manage a trade so that you can extract the smartest and optimal profit from it? Not always maximum. I think a lot of people get hung up on max profit. And while that is always the goal, it's going to be balanced with price movement ranges that make sense for that pair and for that time frame. So case in point here, if you're taking a look today at the high of 12,048, 12,048 on the gold market, and you think about where the projected low would be for taking profits out of the market. And we use a very specific tool, and I use very specific calculation on how to do this, but here's a really simple example. You go take a look at what gold would do on a Tuesday, and I get a pretty good idea. The expected move that I'm looking for is going to be somewhere between 11 and 15 points. So what I'm doing then, it's really simple arithmetic. This is one of the most basic formulas that I'm giving you right now. So 1204.08 minus 11, my initial profit target, you can see there, is about 1193. And when you look at what we were looking for, you can see the 93 is right there. That's what 93 means. We were looking for this market to head down to 93. So for folks who had already shorted at 1216, this was one of the profit targets from back in here. But today, 93 was in reach. And if you take a look at today's low right here on gold was 1292.7. So that's when I talk about the accuracy of having these price movement ranges with a very high level of predictability. With the right arithmetic, you can project lows with a very high degree of accuracy. This is one of the most basic uses of it. Let me give you another example. Some folks were long crude, and we have a very bullish take on crude, and a lot of folks were long, and they were playing momentum trades intraday. And one of their fears is that, crude's having a really big day. How do I know how far it can go, and where should I reel this thing in? Because it's really not an uptrend any longer, but it is bullish off a pretty healthy little retracement. So one of the questions I actually got quite a few emails about it. And they said, okay, Rag, where could this thing go? I don't want to, give up all these great profits that I've got. So I said, well, let's calculate the upside projection. 67.48 was the low. And we know on average, this market's capable of doing what? Well, for those of you who don't know, Tuesday is one of the more volatile days for crude. And it can move as little as $1.40, on average about $1.70, but on the upper end, it can move $2. So once this market really gets going, the level you could be contending with is 69.48. 69.48. That's a +2 move. Now we have levels beyond that. That would be a different formula, but let's take a look at today's high. You can see the high was 68.94. Okay? 68.94. So the three things you want to add to this, and I'm going to show you how this works once again. So we have 67.48. Now, plus $1.40 would be a minimum. And that might have been a level that we initially were looking at, $1.40. So that would be looking at 68.88. But then we could look at another 30 cents above that, which is the $1.70. That's 69.18. So by the time you're crossing over 69.18, you're taking about an average price movement out of this. That's 69.18. Then the next level you're looking for today would have been 69.48. But if you didn't know the $1.40 or $1.70 and you went right for the maximum, guess what happened? You left money on the table. You missed it, right? If you just sat there saying, we're going to get a $2 move today, right? $2, here we come. And you didn't factor in some of the more subtle numbers that are the low or average price movement range, you'd still be waiting. And that would probably be okay. We may hit it or we may not. But the trick is, as long as you have some guideposts, think of it as mile markers along the highway. As long as you have some of these, all of a sudden, anyone who is taking an intraday momentum play says, hey, you know, at least 69.18, sure, the market might go higher, but I should at least pay myself and take a little something off the table, or maybe use this as a trailing stop. I mean, that's how subtle and powerful these levels can be. And these are just a few of the markets that we're watching and that we're in, and how to use these kinds of exits. And it's a perfect time to remind everybody that we have our encore presentation of the perfect exit formula coming up tomorrow. Now, last week, I talked about the markets from the standpoint of mostly some day trading and some futures. And I think a lot of folks said, yeah, Rog, what about stocks? This is stuff work on stocks. And I said, well, sure, because we got long Microsoft. This was a trade we put out as an alert. We got long Microsoft at 108.55 down to 107.55 with this same technique. We got long Nike. Again, same technique. We have long positions in a number of names. And again, the way that it works is based upon knowing the price movement ranges. In some cases, knowing when the market's very, very narrow in range, or lowering its volatility. Okay, so we'll be talking about these stocks, ETFs, and options, how I use these same kind of calculations to find options targets, profit targets, price at the money calls and puts, etc. So this is the encore presentation, more emphasis on some of the stocks, ETFs, and options in both stocks and futures that I trade. Check it out, simplertrading.co/exits. And that is tomorrow, by the way. Tomorrow, 8 p.m. Eastern, 7 Central. I'll see you in the next update.